the show, everyone. Hope you guys are having a great day as always. Today, we're going to be talking about Amazon.com. And with that being said, you guys know that this is quite a large holding of mine. And I wanted to cover some of the key talking points that I'm going to be paying attention to during the call this Thursday. So with that being said, I want to also let you guys know that we are recording this on Monday, October 28, 2024. So it's a little bit before the actual earnings date. And then we'll see how this ages. We'll see what the earnings call talks about. Maybe I just discuss it with you guys during a live stream. And I will be doing this video in, one take, as we always do. Thankfully, I have the time with work and everything to do these. So let's talk about what has the thesis played out, or what KPIs have actually improved since the original thesis was pitched back in Q4 of 2022. And then what are we expecting in this upcoming earnings, if anything at all, or if it's just business as usual. So with Amazon, we paid attention to a few key points in our original thesis, which was driven by cash flows. And at the time, you can just take my word for it that back in Q4 of 2022, we had a lot of investors basically saying that Amazon was not capable of producing cash flow. And a lot of this came from the misunderstanding of the differences between maintenance CapEx and growth CapEx. And we talked about the example of, hey, at some point that they're going to stop building a new FedEx, a new UPS inside of themselves again and again and again, right? And at some point, once that CapEx starts to exhaust itself, it will translate more to just maintenance CapEx, and you'll see the actual cash flows really start to come out from this company. And that is pertaining to the overall ecosystem that Amazon is bringing about. The other points that we talked about as far as the main drivers of value at Amazon.com was, of course, the cloud, which I think everyone is quite aware of, AWS, and advertisements, which at the time was much smaller. And we made a prediction that within the 5-year mark, Amazon ads would be larger than that of Meta. And so it looks like we're going to be on track. Oh, by the way, Meta of 2022, not the Meta of now. So it's not a moving goalpost. It's a goalpost we set out back in 2022. So that being said, I do believe that they're on track to meet that goal. And when you think about the value of an Amazon advertisement, it's a lot more valuable per se than that of a traditional social media, because at that point you're just kind of guessing whether or not that customer would be viable to purchase that product. And now, of course, depending on the platform, you can make very good guesses. But with Amazon, let's say I use the analogy typically, I'm searching for a blanket. And then when I search for that blanket, Amazon now knows, hey, this person is searching for a blanket. So all the other blanket selling companies, they know if I put myself, or if I pay a little extra, I can show up right in front of that person who wants to buy a blanket. This example could be illustrated when you go on Amazon and you search Celsius. You want to buy Celsius, a very popular stock here on YouTube, and just see what comes up. You'll see a lot of the advertisement brand that you may not have ever heard of before shows up at the very top. They're paying for that spot because what do they know? They know you're searching for an energy drink, a certain kind of energy drink, and they have a similar product offering to that of Celsius. So they want to show up right in front of you because you're very likely to be translate to a sale. Now, with that being said, let's kind of go over some of the other key points that have, in addition to those KPIs, done really well. And that basically bleeds into the actual retail business that everyone's very familiar with. So if you go back and see some of the quarters that preceded, or not preceded, but followed the original pitch on Amazon, we started to see margins begin to expand with Amazon Marketplace. So originally I had said that you didn't have to worry about Amazon Marketplace. You could almost assume that that's what gets you in the door, what makes the advertising really valuable. And AWS is over here on the other side, just producing tons of free cash flow that allows them to make the necessary investments that then makes this other platform much more attractive. Amazon has also these other projects that I also still value at zero, like Project Kuiper. I don't really know how to evaluate that or include that in the valuation of Amazon, so we leave that out. But how we've seen the other businesses progress right now, I would also probably agree with the conclusion if someone were to say, hey, how do you feel about the valuation? My original valuation may actually have been conservative with Amazon. So if you guys actually check out the slides, we can see that the net sales figure, which hides the very profitable businesses inside, was still up 12% year over year. And this is of the latest earnings call. So not the one on Thursday that's coming up where you're probably maybe watching this video, but the one before. And so in that, you have a few businesses that they break out here. You see AWS right there. Now, AWS, that's the cash cow, producing tremendous amounts of free cash flow that enables them to make the investments to grow the retail business that is shown in North America and international. But you can see, even though those other businesses are quite large, and you're still talking about a company with $500 billion in revenue, was still up 12% year over year. So they're still growing quite impressively. And I think no one can dispute that at this point. And then we can see this operating income going up 91% year over year. So this is starting to illustrate to you that the operating margins are beginning to expand, right? Because you see the difference between the operating income percent increase and the net sales increase. Therefore, what's happening? Margins are expanding. So this was the story we were originally telling with the opportunity with Amazon. And also, I say this and you might think, Amazon must have done really well. Well, obviously, my subscribers, you guys are paying attention to the price of Amazon. It's one of probably the things you're looking at. And no, it has done well relative to the market. It has slightly outperformed the market, but it's underperformed some of its peer group in the, I kind of cringe to say this, but the Mag 7. So I think that Amazon has set up itself really nicely for the future as far as a business. Now, I can't predict what the share price is going to do on Thursday, and what it does on Thursday will probably dictate to me what I'm going to do, whether I'm going to add more or just let it ride. But at the point where we're at now, I'm very happy with my allocation. I don't really think I'm going to be adding a ton more to Amazon unless we see some sort of pullbacks. I'm up a ton in the position, and with everything that's been going on with the other opportunities I have in my portfolio, I'm satisfied with Amazon. I'm just going to let it do its thing, let my winner ride. And then if it does pull back on Thursday, because that could happen, you're probably watching this video and it might have pulled back. Then at that point, depending on how much it pulls back, I might consider adding even more to the position, sort of building it out a little bit more. But that's what we do with some of the longer term plays. We just kind of let them do their thing. We're fairly comfortable with each quarter by quarter updates. We take advantage of the market volatility that it gives us. And then over time, we should do fairly well. It's actually one of my laggards within my portfolio, because technically with the year-to-date performance we've exhibited, Amazon's actually one of the worst performing stocks in the portfolio, which is kind of funny because a lot of people attribute Amazon to being a high quality. Now, it was one of our really strong performers last year, but this year it's actually been one of the laggards. So, but again, still a strong performer nonetheless. So with Amazon, I also want to kind of talk about some of the KPIs, as the ones we already talked about are, obviously going to be included in that. And the net income figure, we want to see, and you can see again, net income margins are also increasing. We want to see just the margins, right? So I'm illustrating net income margins, operating margins, etc. So the segment for North America, I want to pay attention to this one because this is obviously going to be the most profitable segment, but we don't want to ignore international. So international has typically been the weak point of Amazon. They've struggled to make this extremely profitable. North America, they have figured out. They have to figure out international. So if we start to see signs that this is really coming up on the up and up as far as margins go, that would be a very positive sign. Because again, I did not pencil out in my initial valuation retail being profitable at all. I basically said, this thing is just to get you in the door, and then ads will be the way they make profits from it. Funny enough. And if they can actually eke out tons of profits from that, well, so then my valuation initially was going to look very conservative. And then AWS, we want to see reacceleration here. So net sales of up 19% year over year. That is quite strong given its size. Granted, I'm not going to say that that's terrible, but I would like to see if there's going to be some signs of reacceleration here in the future. We know that all the hyperscalers are investing heavily in data centers for accelerated compute. I would like to also see if they talk a little bit about what their offerings are as far as ASICs goes. What's their training looking like? But if there's any signs in the future of them kind of trying to figure out ways to bring down the cost in the CapEx or upgrade cycles yet to come. But as far as AWS goes, I don't really expect weakness here. Now, this would be, let me address that. If we do see weakness in AWS, that would actually be a point of concern. But although I doubt we're going to really see that. But if there was going to be something that could cause a stock price to plummet, could be something like an AWS, miss or something like that. Some concerns there. And then this free cash flow, again, you can just take my word for it that back in 2022, specifically Q4 2022, a lot of investors here on YouTube and elsewhere were demoralized with Amazon, and basically I heard a lot that Amazon's not capable of producing free cash flow. I think that has been utterly squashed as we started this video talking about that. This slide alone really shows or exemplifies that point, that up 572% year over year. It was, if you more familiar with accounting, it was more obvious to you, but just to, again, we already addressed it, but to address it yet again, you did have to distinguish between growth CapEx and maintenance CapEx, and then that actually got you the free cash flow number. And for a very long time, Amazon has confused a lot of investors that they didn't know how to evaluate it, and a lot of value investors didn't. Well, I would say respectable value investors didn't fall for this, but value investors in quotations always thought Amazon was very expensive because they didn't know how to at least read the statement of cash flows very well, and add additional nuance, right? Because nuance is important with everything that we look at. But yeah, those are the KPIs that I wanted to highlight and pay attention to, and kind of say, depending on what we see on Thursday, I'll think of it as a positive sign or a negative sign. But yeah, again, kind of readdressing this point, it has performed basically at market. I think the setup is that we could see a breakout to higher prices. But for me, as far as what I'm going to be doing with my position, is absolutely nothing unless it sells off, and then I'll think about adding to it, because there's just other opportunities I think are really attractive too. But you could do way worse than Amazon right now. That's what I'll say. You could do way worse than Amazon. I think Amazon is a very interesting value proposition. I did add little bits here and there this year on some of the dips, but other than that, it's not been the biggest purchases this year. With that being said, I want to thank you guys for watching today's video. If you liked the video, please feel free to leave a like, share, subscribe if you so like. And if you want to join the club, it will be in the link in the description below. I update my portfolio very regularly. You can check out to see how my 1.6, 1.7 mil portfolio is doing, and you can talk. I encourage only people who want to be part of a club that shares ideas. And so if you're looking for that kind of community, I think you'll be a good fit for us. But otherwise, I'll be seeing you guys on either the next live stream or the next video. See ya.